Today we're taking a look at SushiSwap, cryptocurrency analysis and prediction. Welcome back to Crypto Cash. This is your one-stop shop for cryptocurrency analysis. Before we take a look at Sushi, please consider subscribing to get notified as soon as these videos are released. This gives you a head start so you can effectively plan out your trades and make an informed decision. I have years of trading experience, and my goal here is to share my knowledge with the world, so thank you so much for tuning in. I always start off with the fundamentals, then dive deeper into the technical data. I also provide you with action plans for the future so you know what I would do in each scenario as a day trader and swing trader. Be sure to stick around to the end, of course, for my recommendations. Please note, this is not financial advice. This video is designed for educational purposes only. Now let's get started with the fundamentals. SushiSwap, also known as Sushi, is an example of an automated market maker, an AMM, which is an increasingly popular tool among cryptocurrency users. AMMs are decentralized exchanges, which are smart contracts to create markets for any given pair of tokens. The total supply is 250 million, currently at 51% of its capacity. Today's high was $17.68. Today's low was $15.65, daily change of 10%. The 52-week high was $23.45, and the 52-week low was 63 cents. The price has changed quite a lot in the past 24 hours. So as you can kind of see, it's jumped around a little bit. Previous consolidation period was short-lived, however, when the price spiked up again recently to test the previous resistance of $16.79. Current resistance is at $17.68. Support at $16.35. And now for the technical analysis. For my day traders out there, as you can see on the 15-minute chart, the RSI is sitting at 60, neither oversold or overbought. This is a positive technical sign, depending on obviously if you want to go long or short. The MACD does show also a lot of bullish momentum, but it appears to be dying off a little bit. The volume has been very high over the past 12 hours, which is excellent for day traders. The VWAP has also held a support line pretty much all day as well with a small variance. So just keep an eye on the VWAP and how it reacts to the price moment, because the fact that it's overextended right now and it should pull back soon. Now, if you plan to go long, wait for confirmation first. Here's a couple of options I would consider as a day trader. If I was bullish, I would wait 30 minutes after the currency is still respecting the support level established by the VWAP first. Now, if it holds, I would take a small position first, maybe somewhere in the range of 25 to 30%. I would also see how the price reacts to the resistance line of $17.68. If the price breaks above for at least two 5-minute green bars, I would consider adding more to my position. Now, I do prefer two 15-minute green bars. That would be the preference, but 2 5s I would take with the price action being where it's at right now. I would also add another 25% to my position, then continue to pay attention to the RSI to ensure it isn't oversold. In other words, to ensure it isn't overbought. Anything over 80 would be a sign for me to want to get out. I always get a little nervous when the RSI gets that high. I usually like to take my profits early, so I would sell maybe 50% of my position once it hits that point, and then a little bit more as the momentum continues to shift. Now, if I felt like the price was going down, I would pay close attention to the support level of $16.35 to see if it gets tested again. If the variance is large enough for it to break and stay below, the previous support is now considered a resistance. Once that's identified, I would just look at the RSI oscillator and see if it's considered overbought. And then, of course, typically anything under 45 to me is a good entry point. I would also remember to see if the MACD is trending down and just generally look at the momentum of the MACD. Again, I'm doing all of this on the 15-minute chart. I will vary and jump back and forth between the 5 and 15, but I think the 15 gives me a little bit better, more concise information with the technical data. Either way you look at it, I would also remember to average down by selling small portions of my total so I can take profits whenever possible, just in case the price corrects itself. For my swing traders out there, taking a look at the 4-hour chart, you can see the 50 and 100-day moving averages are working as support lines. So be mindful of this moving forward, as they will get tested soon after the price sells off and loses momentum. Currently, the indicators tell us the bulls are in control, but this could change at any moment with the RSI being as high as it is. So I would not consider taking a long position at this exact moment unless I can verify a few other factors, but keep in mind that MACD also shows it's almost fully extended which does also imply a momentum shift could occur soon. Now, me personally, in this situation as a swing trader, I would wait for the price to drop a little bit more if I was planning to go long. Unless the price jumps over the resistance line of 1768 and stays above for at least two 15-minute green bars, then I wouldn't consider a long position. Now, the reason for this is because the RSI is still at its peak. I only prefer to take long positions when the RSI is under 70. Even though the MACD does look okay, I would prefer to invest when I have, again, more than 3 indicators present. Now, if I was feeling bearish, I would wait until after the RSI is overextended, somewhere in the 80s. And if the price hits the resistance level and bounces and holds for just say two 15-minute red bars, then I would essentially consider a short-term trade position. Now, you'll learn this about me. When I swing trade, I'm always jumping back and forth between the 5, 15-minute, and 4-hour time frames. So maybe try that yourself, see if you like it. Each indicator has different weight depending on what time frame you're using, so just be mindful of that, of course. But the 4-hour time frame is helpful to kind of get quick perspective on the overall sentiment, and the shorter time frames are helpful to kind of get more specific cellular understanding of what's actually happening right now. But either way, once I get both indications of a sell signal, I would put maybe about 20%. I would put about maybe 20% of my total in, open a trade position, and I would keep adding a little bit as it gets closer to my goal. Same thing would happen too when I get like right to a point where, just say the RSI is maybe just say at 40, then I would consider slowly edging out and selling my positions. I typically like to sell small portions about 20% of the time. Now, this just ensures that I'm profitable. I've gotten burned many times before by going all in at first and trying to get all out at the right time. I've noticed the best way to do it is to average in and average out. So just don't go all in unless you're planning to hold on for dear life. Anything over just say a 15 to 30 day time frame, then you don't want to go all in. Perhaps you can give this a try yourself and tell me if it works for you. Maybe just go ahead and comment below. Either way, I cannot stress this enough. Make sure you set a target, and if you don't hit your target, get out and take your profit. The key to being a profitable trader is to survive to trade another day. Now, if you did find benefit from this content, please consider liking and subscribing, and also let me know your thoughts if there's anything I can do to improve your trading experience. Feel free to contact me on Telegram, Instagram, or Twitter. The links are in the description below. Also, comment below and let me know what positions you're holding, if there's anything else you want me to go ahead and cover. Comment, let's all grow and learn together, and let's build our wealth. So I want to thank you very much for joining me here. We'll see you again in the next video.